Hello and welcome to Dubai Property Report, the weekly podcast brought to you by Terra Real Estate, your trusted partner for navigating Dubai's dynamic property market. I'm your host, and I'm delighted you're joining me today, whether you're in the car, at your desk, or sipping coffee somewhere cozy today. We've got a full lineup, starting with the ultra-prime luxury market, then diving into what renters are experiencing right now. Plus, I'll share some real-world context and quick tips from my years of working with buyers and investors. As always, this is your one-stop update for smart decisions in Dubai real estate. Ready? Let's begin. First, let's talk about the luxury ultra-prime segment. You know, the can they even afford that area of the market? Now, ultra-prime homes, those priced at over 10 million United Arab Emirates dirhams, typically make up just a small slice of overall volume. But in H1 2025, that slice grew to about 4% of total market volume, up from barely 1.1% in 2020. That's a structural shift. Nearly 4 in every 100 transactions are now ultra-luxury, and when you dig deeper, it gets impressive. Global luxury broker Annual and Velkers reports that Dubai has just had its strongest half-year ever for high-end deals. 3,731 sales over 10 million United Arab Emirates dirhams in just 6 months. That's a nearly 63% increase year over year, truly outpacing global peers. So why is this meaningful for our audience? Here's my take. It tells us that wealthy buyers are not just visiting, they're staying and committing to Dubai. Whether they're buying beachfront mansions on Palm Jumeirah or golf-front villas in Emirates Hills, this flight of capital is real. And long-term? At Terra Real Estate, we've seen serious investor interest, especially from Europe, India, and the UK, people who see Dubai as a safe, tax-free, dynamic place to base their prosperity. Quick tip for investors: even if Dubai ultra-prime feels out of reach today, this trend brings ripple benefits, prestige spillover, comps for surrounding areas, and increased interest in top-tier mid-market projects. So if you're considering the next rung down, you're indirectly riding the wave. Let's switch gears. A breath of fresh air for tenants and first-time investors. The rental market is stabilizing finally. According to Bayot and Dubzil, over 72,000 new homes are expected to come online in 2025. With that supply, long-term rents are easing in some areas, even dipping 6% in Bur, Dubai, and Dira, and up to 5% drop in prime luxury apartments, like Dubai Marina. In contrast, budget apartments saw a modest 7% increase, while mid-tier units in areas like JVC and Business Bay remain steady. Villas affordable to mid-range spots like Damak Hills 2 and Mir Dafad moderate rental rises too. But high-end villas are seeing slight softening. Gulf News: as a broker, I love this trend. It brings options and leverage to rent investors too. If you buy now, expect steady income without stretching for sky-high rents. Plus, as DLD rolls out its first-time homebuyer initiative, tenants are seriously asking, should we buy? Suddenly, that rental versus buy conversation gets real. More supply also means the short-term rental market keeps performing, ideal for investors eyeing serviced apartments or Airbnb-style rentals in high-tourism areas. Let me pause. Here, imagine you're a tenant or young investor looking at Jumeirah Village Circle or Arjun. Now you have negotiating power, can shop around more, and maybe even switch from renting to owning. All those signs point to a rental landscape that's balanced and sustainable, something we at Terra Real Estate always check to time entry. Moving from supply to affordability, Jumeirah Village Triangle JVT is seeing rental dips of up to 8% this year, signaling it's becoming a buyer's market. Similar pricing shifts are happening in Discovery Gardens, Mudon, and International City. For first-time investors, this is gold. It means purchase power is up, yields remain strong, and being selective pays. Personally, I love pointing clients toward areas where rent is stabilizing, but demand is still steady. Entry prices are sweetening, but tenant demand is still realist, mushily among professionals and small families seeking community living. Pro tip: if you're considering JVT or its offshoots, act now. Prices are dipping a bit, but that's often the best moment to dive in before comp values bounce back. Thrilling news on the transit front. Bimetro's upcoming Blue Line is set to ignite growth in Mirdif, Silicon Oasis, Academic City, and surrounding neighborhoods. Historically, any new metro route has supercharged real estate demand. Just look at the red and green lines. Accessibility is the most underestimated driver in Dubai. When commutes drop, interest climbs. We've already seen upticks in search volumes and early bird developer pricing along the future Blue Line. Mirdif's apartments, once considered fringe, are now capturing proactive buyers who know connectivity equals capital appreciation. If you're thinking family, education, or long-term flips, the Blue Line corridor is where future returns live. At Terra Real Estate, we analyze infrastructure forecasts alongside project launches, making sure our clients are ahead of the curve, not chasing it. So far, we've got JVT rents easing perfect entry point, metro expansion fueling long-term growth, proactively looking at Mirdif and Co. These are the moments where strategy meets timing. And again, that's why Terra Real Estate exists. We don't just show you properties, we map out where rents are cooling, where metro stops are landing, and where opportunity is unfolding. Our next insight takes us reassuringly back to stability. According to recent data, 71% of Dubai tenants are renewing their leases, with around 38% signing longer, 3-year contracts, and only about 9% moving out. This tells a clear story. Renters are choosing consistency over churn. They're saying, I'm happy with my place. Even if rent dipped 5 to 8%, I'll stay. From an investor's perspective, that's golden because it means steadier tenant retention and less vacancy downtime. You're not chasing tenants, you're holding on to them. For Terra Real Estate clients, that spells confidence. If you buy in a well-positioned community now, your risks are lower and cash flow more reliable, cornerstone of smart portfolio strategy. And speaking of rising literally, Soba House has officially launched a brand new 71-story tower in Meydan. Yes, you heard me right, 71 stories. From observation decks to infinity pools, premium amenities, and sky-high views, the buzz is real. This master plan sends a loud signal. Builders are innovating, investors are confident, and Meydan is becoming a destination, not just a location. For buyers, a tower of this scale means choice units with park, canal, or skyline views. High rental appeal to professionals and premium tenants. At Terra, we closely review such developments at planning stages, because when a tower like this lands, it lifts local comps and offers strategic entry options, especially for early buyers. I want to pause here and reflect. So far this episode, we've uncovered multiple signals. Ultra-prime luxury deal volume is expanding. Renters are getting options and sticking around. Metro lines are reshaping suburb growth. Groundbreaking towers are entering Meydan. One tells the same story. Dubai real estate is maturing into a stable yet exciting global market. And we at Terra Real Estate analyze all these dynamics to help you invest confidently, from studio apartments in JVT to sky-high units in Meydan's latest icons. Now, let's shift our focus to the booming short-term rental side of things. According to College Times, short-stay rentals are surging, even as traditional long-lets cool slightly in some areas. Why? Because tourism is back at full throttle, corporate travel is booming, and platforms like Airbnb and Booking.com are seeing massive demand, especially around Dubai Marina downtown and Blue Waters. Here's a real insight. Villas and apartments in prime vacation spots are booking out faster than ever. We're seeing 95 to 98% occupancy peaks during major events and holiday seasons. For savvy investors, that translates into significantly higher yields than traditional one-year leases. Dubai's digital property revolution just hit another milestone. 2 tokenized luxury units sold for 34 million United Arab Emirates dirhams in just 12 minutes. Yes, 12? These are fractional shares in physical assets enabled by blockchain and real estate platforms. Buyers from around the world are snapping up shares quickly. This is a game changer in global property investment, bringing liquidity, transparency, and access in ways no traditional contract can. If you're curious about exposure to Dubai's luxury sector without buying a whole penthouse, this is where it's heading. Terra Real Estate is monitoring tokenization closely, and while we're not yet launching tokenized products, we're advising clients on how this new route intersects with our high net worth portfolios. Big headlines from Guelph News: Dubai's LATEST branded residential project is launching with none other than an Olympic champion as its ambassador. We've seen celebrity-backed residences before, but this one brings authentic, athletic credibility, fitness-oriented amenities designed in collaboration with a world-class athlete. I see 2 key takeaways: branding adds premium cachet, and curated design features that resonate with target high net worth buyers, especially health and status-conscious investors. It also gives off-plan buyers something special, not just a property, but a lifestyle narrative backed by real performance. That's gold when staging or marketing residences. Last headline for today: Dubai's first-time homebuyer incentives are here. Developers are slashing prices by up to 10% for qualified buyers, but mortgage rates aren't budging. This is tactical pricing, not desperate discounts. Developers are prioritizing velocity without eroding long-term value. For buyers, this can be strategic. If you're a first-time buyer who qualifies, that 10% saving on list prices, especially in mid-market or family communities, can improve your early ROI and affordability. But do the mortgages offset it? Not fully. That's where Terra Real Estate steps in, helping you map out financing plans, calculate your true ownership cost, and make sure the deal makes sense once interest, fees, and others are factored in. So, what do these last headlines tell us? Branded residences are elevating Dubai's luxury, narrative-vating brand buzz and athletic credibility. And first-time buyer price discounts are signaling access, but buyers still need smart financing guidance every week. These stories interlink to paint a full picture of Dubai's market evolution, and it all feeds back into one point. Now's a moment of opportunity, if you know how to navigate it. Big news out of property news. The UAE has officially overtaken the US in the global skyscraper race, with Dubai now counted among the world's tallest skylines. In layman's terms, Dubai isn't just building homes, it's rewriting skylines. From iconic towers like Burj Khalifa to the new breed of Supertall developments, Dubai's urban identity is now firmly on the world stage. What does it signal for investors? Global ambition. You're investing in a city defining architectural horizons. As a broker, I can tell you those towers inspire confidence, not just for residents, but for world-class capital allocation. Following that, Khaleej Times reports on multiple new Supertall skyscraper projects being planned or built across Dubai. These aren't just structures, they're statements, destinations, investment catalysts. Their presence elevates neighboring real estate values, brings augmented retail and hospitality infrastructure, and establishes new focal points for global interest. For investors looking at off-plan high-rises and capital appreciation, these trends are reassurance that supply is intentionally architectured, impactful, and forward-thinking. So there you have it. Every item on our list, from rent stabilization and metro connectivity to market disruptors like tokenization and new skyscraper FEATs, speaks to Dubai's evolution as a resilient, global-grade real estate market. These trends don't happen in silos, they converge. And that convergence fuels strategic opportunities for investors of any size. That closes our episode of Dubai Property Report. We dove deep into 12 top stories shaping the property landscape: service entries, architectural breakthroughs, branded living, infrastructure expansion, and investor innovation. At Terra Real Estate, we synthesize all this so you don't have to. Whether you're exploring long-term rentals, ultra-luxury homes, branded residences, or tech-driven access like tokenization, we position you with confidence and clarity. Ready to explore your Dubai investment option? Contact our expert team at Terra Real Estate. Subscribe and like this episode. If you found value, follow us on Instagram and LinkedIn for additional market insights. Thank you for listening. Wishing you success in every investment journey. Until our next episode of Dubai Property Report, happy investing, stay aware, and see you soon.